Hello, this is Dale, and this is a video that I do at the end of every month to show you the power of my 2-day till expiration credit spread strategy. What I always do is go over one of the trades during the month that we made and then rack up for how we did in October, which was 9 out of 10 wins, and also show you what we're doing year to date. I like to show these. Not many people actually show you results. That's one of the things my members see is the trades as they were made and how they exited, and they see a rack up of all the trades. They're listed, they're archived for the last 11 years. 2-day till expiration credit spread strategy has 4 edges. First of all, this strategy yields monthly income on a consistent basis. We're not going to win them all, but we're going to win 87% of the time. And the time when we lose, we're going to control that loss. A lot of people say, oh, credit spreads are great. You got a high win percentage, but when you have a loss, it wipes it all out. Well, that's not true. That is not true. As a professional, I can tell you that there are guidelines in place that I teach to show you how to manage that trade and how to get out without taking that big loss if you have a trade that goes against you. Now, thinking about it, if you had $1 every time you won, and when you lost $3. Okay, so let's say 75% of the time you're right. In other words, you're gonna win $3, you're gonna lose $3. That's a break-even strategy. All right. I'm looking at a strategy that brings in 87% winners. So that right there shows you the power of this strategy. I'm going to place a trade when it's overbought and oversold. Well, what does that mean? I've got some statistical lines that show me when I've got a very high percent that the trade is going to revert. And I'm going to show you one of those today. I also use delta of about 0.1. For those of you that are uneducated as far as the Greeks are concerned, you don't have to worry about it. I actually send out an alert that tells you exactly what to do. But in layman's terms, if you have a short strike of delta 0.1, that tells you you've got about 90% chance it's going to expire out of the money. And that's what we want, because we are sellers of premium. We're sellers of premium. And we're doing this for the day before and the day of expiration. Okay. So we're taking advantage of that overnight theta decay. Well, what is theta decay? Okay, quickly, let me show you this chart. This shows you the options that we sell are out of the money. Therefore, the only value they have is time. And time erodes very quickly. And you can see what happens in the last 2 days. It vanishes. All this premium that was on these options goes away. That goes into your pocket. We are sellers of premium. Here's one of the trades we made this month. This was a bull put that I put on October 23rd. We sold the bull put, and we sold the October 57.40 and bought the 57.30 for $1 credit. And they say, okay, why did you do that? Well, you can see how the market was coming down. It was coming down. It was coming down. This line right here statistically tells me that when it crosses this line, it's got 95% chance that it's going to revert back to the mean, this being the mean up here. Okay. So when it crossed this line, I put on a trade. I put on a bull put trade, expecting that to then come down. And if it did came down, to revert back and get close to the mean, giving us max profit. And that's exactly what happened. It's exactly what happened. So the next day we bought that bull put back, and it was worthless. It was worthless. So we are sellers, so we got all that premium. Okay, what does that mean? Well, $1 premium minus zero gives us $1 profit, or $100 per one contract. $100 per one contract. For 5 contracts, that's 500. For 10 contracts, that's 1,000. Now remember, this is past performances and no guarantee of future results, but I've been doing this for many months, and you can see that I have to say that past performance is no guarantee of future results. But this strategy has been a winner for many years. I pride myself in this strategy. I've been trading professionally for greater than 4 decades, and I've worked hard to come up with a very, very simple process that can be repeated time and time again, and learned by the retail investor to get in there. Now, yeah, it takes a little time to master it, because emotions get involved, and if you have a loss, people just freak out. They can't handle a loss. Well, losing is part of trading, and once you embrace that, and once you embrace this strategy and see, well, okay, I'm going to have an occasional loser, but I'm going to stick with it. You're going to make consistent money on a monthly basis. These are my documented results for October. I had 9 wins and 1 loss. The wins totaled $4,300 and the losses $1,500. This is based on 5 contracts per trade. 5 contracts per trade. Well, what kind of investment do you need to make 5 contracts per trade? $5,000. $5,000. In 1 month, you could have made greater than 50% on these trades. These are very conservative trades. Year to date, I've had 61% winners, 9 losers. That is 87% winners. So based on 5 contracts, that would have been $17,005 on $5,000 investment. You can't get this anywhere else. I wish I could show this to all investors, to show them, hey, you can make money on a consistent basis in the stock market, and here it is. I'm going to show you. I'm going to teach you how to do it. Once again, I have to say, past performance is no guarantee of future results. Well, during the month, I get myriad of testimonials documenting what they're doing. So I just want to highlight 3 that I thought were pretty neat. One of them came from Ken Z on October 23rd. He said, "This is to Dale the Wizard Brethauer. Thank you." I don't know if I'm a wizard, but I've been doing this a long time, and I really appreciate one of my mentees, doing well with this strategy. The second one came from Abdul S. He said, "Thank you for your clear instructions and alerts. I've been studying and playing with option trading for only 3 years, and it was a wake-up call to find your website. A little bit of focus and a little less jumping around has helped me calm my nerves and find my footing, so thank you. Already made thousands." That was October 13th. Then on October 7th, I got something from Todd D. He said, "This morning, I had a working order already on Thinkorswim for a debit of 10 cents. Within 3 seconds of the bell, he's out in the Pacific Coast. The price hit the working order and bought the spread back for $1 profit on 20 contracts. Thanks for the great system, Todd D." I just want to share those. The market just closed. I just want to share those because I get a kick out of when my members are profiting from this strategy. So what I'd like you to do, I'd like you to go to www.optionsinfinity.com. This is my website. I'm the head trader. I've also been a hedge fund manager, and this is where I teach how to do these 2-day till expiration credit spreads. I release 1 to 2 credit spread trades per week, and I send out an alert as to when I'm doing these trades. The other thing is, once a week on Tuesday, I do a recorded webinar that I talk about the trades that were made that week, why I made them, how I monitored them, how to manage them, and how I exited them. This in conjunction with alerts allows you to see how a professional makes trades, what their thinking process is, and helps you to master this strategy. I hope you all join me. Thanks a lot. Bye-bye now.